Hello everyone, welcome back to Financial News in Palos Heights. Today being January 27, 2020. Paul is with us from Ameriprise Financial. And Paul, you're going to give us an update as to what's going on with the market and the viruses and all those things that are really impacting.
Absolutely. The second half of the show, we'll talk about the virus, the coronavirus. The first half of the show today, we're going to talk about Q4 earnings and what that expectation is. So the Q4 earnings season shifts into high gear this week with 147 of the S&P 500s on the docket, including half of the Dow Jones Industrial Average. So we get 14 out of the 30 Dow Jones stocks this week as well. Through last Friday, just 17% of the S&P 500's current constituents had reported their results, with earnings generally beating expectations but not by much. According to FactSet, the S&P 500 earnings per share are currently on track to post a 1.9% year-over-year decline versus the 2.1% drop expected at the start of the season. So we are expecting a drop, but not as much as we thought, which is a good sign. Though the outperformance has been modest, the number of companies beating expectations has been favorable. FactSet data shows that 73% of companies have reported better than forecast earnings per share, while 67% have reported better than expected sales. The average earnings per share beat of 3.2%, however, has been below the 5-year average, while the average sales beat of 1.3% has been above its 5-year average. Interestingly enough, earnings per share estimates for the current quarter have risen a bit over the last week. It's still really early in the season, but forecasters now expect Q1 earnings of $40.58 versus the $40.47 forecasted in the week. So again, a good sign. We're expecting higher earnings for 2020. This is somewhat unusual, as expectations for the current quarter typically decline throughout any given reporting season as companies seek to quote-unquote lower the bar and business challenges inadvertently rise. Current Q1 earnings estimates equate to about a 4.5% year-over-year increase, hopefully putting an end to the flat to lower earnings of 2019. Boeing's been in the news a lot lately, and the 737 MAX shutdown and the developmental spread of the coronavirus, however, could have more tangible negative impacts on the near-term results. We're going to talk a little bit further on the coronavirus and its impact in the second half of the show. So I'm going to conclude the Q4 estimates here and flip it back over to Ron.
And Ameriprise Financial also supplied us with the morning notes. As of this morning, the global equities are sharply lower to open this week as investors' concern over the coronavirus grows to the number of confirmed cases approaches near 3,000. And
we reported that last Monday.
Yes.
Gave viewers a bit of an expectation that it could be a down week last week, as it was, and that story continues.
Yep.
And we've got data on it for the second half of the show.
Very good. The yield on the 10-year Treasury fell to 1.61%. This morning, the lowest level in over 3 months.
That makes sense too. When the market is going down, right, the yield will fall and the price of the bonds go up because people want to buy bonds when things look dire in the market.
And the Japan's Nikkei finished the Monday session down 2%, while the markets in Shanghai and Hong Kong remain closed for the Lunar New Year. And it's a good thing because there's going to be impacts because of the virus.
Absolutely.
And the last thing is the WTI crude. The oil is lower by nearly 3%, while the price of gold ticked slightly higher overnight. And the crude going down hopefully will help our gas pump prices.
Could be what might be a small positive to what's going on with the coronavirus.
And to give you year-to-date on the S&P 500 is a plus 2.10%. The Dow Jones a plus 1.68%. NASDAQ Composite is a plus 3.84. The NASDAQ did have a slight jump just recently.
And it's nice to report that we're still, I mean, even though we're almost through the first month of the year, we're still holding on to positive gains despite last week's market negative activity and what we think could be coming with potentially this coronavirus.
And the market is just plain strong. The economy, everything is just so solid that it's going to take a whole lot to jeopardize anything and see it fall too much further.
Well, we are getting a rough start today. The futures on Monday were negative, and that is going to wipe out some of those gains for the year, but we'll see. The market's not closed yet.
Right. Well, stay with us, and we'll be right back with a show called Your Money. And Paul will be talking about specific topics that may have some impact on your portfolio. Stay with us. We'll be right back. And we're back with Your Money. Thank you for staying with us. And we're going to be talking about the coronavirus. And Paul, what's it doing to the market? Can you just give us a little summary of that?
Absolutely. You know, worries about the economic impact of the coronavirus that did catch up with the global equity markets last week. Last Thursday, China's Shanghai Composite Index, it fell 2.8%. And the other composites overseas, one fell 3.5% before both subsequently closed before the Lunar New Year holiday. But some of that fear has shifted to our markets on Friday as the S&P 500, it dropped almost 1%. It dropped 0.9%. And as this week gets underway, the Japanese Nikkei index, which Ron already reported on, it fell 2%. Stocks in Europe are down in excess of 2% with several hours to go on their trading session. And the U.S. futures opening today are very negative with percentage drops there.
And so if the coronavirus continues to spread, what's the impact, do you feel, or can you report?
It is. So the coronavirus is continuing to spread. With the official death toll at the latest reading I have is up to 80 with 2,744 confirmed cases. That's a 30% increase in 24 hours. These are confirmed cases of the virus now in more than 10 different countries. The Chinese government has taken measures to try and contain the spread of the virus, but how effective they will be remains to be seen. The New Year's holiday in China has been extended several days, and many celebrations, they have been canceled. Travel is restricted over there, especially in the province and in the city of Wuhan, where this all began. They're virtually quarantined there. 5 confirmed cases have been reported in the U.S., though.
Paul, is there a way to quantify the ultimate impact with this virus on the Chinese economy?
Good question. It might be too soon to start to quantify the ultimate how the virus is going to affect everything. It's going to depend on how quickly the virus can be brought under control. But clearly, certain sectors are going to be hit particularly hard. Potentially travel, tourism, restaurants, and other leisure activities, as we saw in previous health emergencies in China, including the SARS outbreak. That was back in 2002.
Right.
In the second quarter of 2003, year-over-year GDP growth in China fell in that occurrence from 11.1 to 9.1%. So that's a pretty significant drop. But however, from there it began to rebound, and it was rising back to its 11.6%, not much more than a year later.
Well, the big question is, what are investors doing?
So stocks are beginning to be shed. Investors are turning to the perceived safe haven bonds. In the past 3 days, the yield on the 10-year Treasury note has dropped from 1.77% to 1.63%. And as you reported, we're seeing Brent crude oil is falling and gold is starting to climb. So we're starting to see people shed stocks, buy bonds, buy gold.
The thing that's confusing for me is we've had health issues in the past, and there has been some impact, but it always recovers quickly. I'm hoping that this is the same situation.
I think you're right. So if prior episodes of health emergencies are any guide to what's going to happen this time, and assuming the coronavirus will ultimately be contained within a time frame, like you said, Rod, similar to other episodes, The negative impact on the economy and its activity and markets is likely to be temporary. Both will recover in time. For the long-term investor, it means it's prudent to maybe stay the plan, stay the course, and stay invested despite the negative short-term activity. Such fortitude may well be tested in the near term, inasmuch as the coronavirus continues to spread with no available vaccine. The fear of uncertainty is what's causing a lot of the panic in the market.
And our economy is still moving forward.
Everyone's economy is still moving forward. Maybe not at the same pace, but it's still moving forward. And with the virus, affecting it, like you said, the economy still chugs on. And that being said, it's earnings season again. So we got a big earnings report this week. It's a big corporate it's a big corporate earnings release this week. Some of the big companies that we're expecting to hear from this week are Apple, Facebook, Microsoft, Amazon, United Technology, Visa, Pfizer, Pulte Homes, Boeing, UPS, Exxon, Chevron, and Caterpillar. That's just this week. So despite the coronavirus, the economy is still going on. We're still going to get earnings reports. There's still things to focus on besides what this virus can do to us.
And hopefully all those earnings reports are going to be very, very positive.
The expectations are for them to be better than expected, which would be great news, right?
Right. Okay, well, Paul, that was a good report. Appreciate that, sharing it with the viewers, and for the viewers to understand more of this. And I'm sure there's going to be a lot more coming up in the next few days of the week, and we'll see where all of this goes. Anything more you want to add to this, Paul?
Just like you said, we're going to be monitoring it closely. We'll be back next week with updates for the viewers, and this is what we have at this point in time, but it is a fluid situation and changing by the minute. So watch your local news to be up to date on this, because it is having its effect on the markets and thus your investments.
Very good, Paul. For Paul Munichel with Ameriprise Financial, myself, Ron Jankowski with Channel 4 and Palos Heights, we wish you good investment day.